I want to take a few minutes to tell you about a really cool program that can help you get into a home much sooner than you think. Some people are having challenges with financing right now with the way the new rule changes, the new stress tests that apply, and it's getting a little harder to qualify under the banks. Maybe it's not enough a down payment, maybe there's credit issues or other issues that are preventing you from getting into the home. My name is Lorne Andrews from Dominion Lending Center's Expert Financial. I'm going to tell you a little bit about our rent-to-own program and how it works. So in a scenario, who would want rent-to-own or who would need rent-to-own? Well, it's quite simple. There's issues, first of all, down payment. Down payment's a big one. I don't have enough, but I want to get into a home now. I'm paying rent every month. I'm paying somebody else's mortgage. How can I start contributing to something that I'm going to own? That's the scenario that we're looking for. So basically what you have to have is you're looking at about a 3%. Okay, so whatever your purchase price, about 3%, that will get you going with a rent-to-own. Okay. So you do have to have a little bit of money down, okay, because you got to have some skin in the game, all right? You have to be on that path, okay? And that will start you off, all right? So that's step number one. Who else would need rent to own? Maybe people that have credit issues, credit challenges, or that don't qualify with regular financing or regular banks right now. So there it is. So there's a scenario where you have a little bit of down payment, maybe it's a credit issue, and there we look at the path of how long it's going to take to repair that credit, because we want to be able to switch that rent-to-own program right over to you with the lenders at the end of the term. It may be other scenarios. There's other scenarios happening in your life. Maybe going through a separation, divorce, not finalized, everything else. But you're moving out. You want kids and everything else to be in a house or a home. The rent-to-own scenario might be that scenario as well. Okay, so there's various different reasons. Income is an important factor with rent-to-own because we qualify you. We qualify you based on what you're going to be able to afford in a mortgage that you're going to be taking over 2, 3, or 4, or maybe even 5 years down the road when you actually convert that rent-to-own property. So that's kind of the scenario that we look at. So you do need income, absolutely, but credit issues, down payment issues, other factors that are preventing you getting to the home today could qualify for rent-to-own. So here's another scenario. So how does rent-to-own work? Okay, so I get that question all the time. Is it, if I qualify for rent-to-own, am I looking for a particular property that somebody is offering for rent-to-own? That I see as a common misconception, and maybe some programs out there work like that. There are different rent-to-own programs out there, so you want to do your research. Our particular program, we're very conservative when we're qualifying to make sure that we're very confident that that house ownership is going to change seamlessly at the end of the rent-to-own term. So how it works is once you qualify, let's say you qualify, and I'll throw a number, I say $700,000 maybe your actual amount, then now you and your realtor go on the market and find your home. Right? And it's as simple as that. It's any home. It can't really be a private sale, but any MLS listed property that you find, and then we make the offer. Once the offer is made and everything else, then that's what happens. So you go find the home that you're actually looking for, okay, that you want. Sometimes there are some restrictions to the type of properties, just because the investor needs to be comfortable with the type of property that you're purchasing. So they're not going to, for example, farms or properties that might have swimming pools and things like that could potentially add to cost to carry it. So now we qualify for rent to own. You and your realtor have gone and find the home of your dreams. Now what happens? What happens at the end of the term for the rent to own? How much does it cost you as a homeowner? So basically what we look at is we look at the CMHC average of that particular neighborhood that you're going in over the last 15 years. And traditionally it's between 3 to 4%. Okay, so let's say we go out and find a home, let's say for $400,000. We'll just keep it simple for this. And the annual rate is 3%. Okay, it's usually between 3 to 4% for rent to own. That's what it usually costs per year to carry rent to own. So let's say after 2 years, okay, so now you're dealing with a home at 3% of $400,000 is $12,000. Okay, so basically after the 2 years, the home gets reverted over at a cost of $424,000. Okay, so that's how it works. So the property value might actually go up more than that, because we know how housing prices increase and go up dramatically in the GTA. That's not a factor. Okay, your factor is already decided exactly when you do the rent to own program. So that's kind of how it works. I have more information that I can share with you in our package, And what I want you to do, if you have any questions, connect with your realtor and they will get you your package out on rent to own so you can educate yourself a little bit more. This may be an opportunity to get into a home much sooner than you thought. So if you have any questions, please reach out to your realtor or reach out directly to us. We'll be happy to answer them. I'm Lorne Andrews from Dominion Lending Center's Expert Financial.